Hi, I'm Jenny Brown. Welcome to this week's MFB News. I hope you're keeping really well indeed. I'm just back from a few days in Berlin with my family. Brilliant place actually, full of history. I don't know that I'd rush back, having been there already and now seen all the kind of things that are really important to see whilst you're there. We had a really good time. It was cold and raining, so pretty much here I understand. Not great weather for the start of the Easter holidays, but I think things are about to turn and we're going to see some warmer weather ahead of us, which is great. But we're not here to talk about the weather. We're here to talk about mortgages and what's been going on in the buy-to-let market. So what we have for you today is a couple of changes from some lenders to run through with you, actually really interesting changes, which we're going to cover off. A bit of an update on pricing and then a review on what's going on the latest house price indices that have been released. Okay, so first up, lender changes. So Keystone Property Finance have made a really big, actually an abundance, I would say, of changes to their lending criteria, which is really welcome. So the first thing Keystone have done is increase their maximum portfolio to any one borrower to £10 million. They've increased their maximum loan amount on any one transaction to £2 million as well. They've also introduced 80% loan-to-value lending up to £750,000 worth of debt. They've also introduced the ability to lend to first-time landlords on HMOs of up to 6 bedrooms and multi-units of up to 6 self-contained units. Now this is an interesting one just to discuss in a little bit more detail. So there's not many lenders who will lend on HMOs and multi-units for first-time landlords. Lenders tend to want you to have a bit of letting experience before they'll kind of fund these slightly more involved properties. Now why is that? So essentially if you were a first-time landlord, you've never rented a property out before and then you took on a block of 6 flats, essentially that's like buying 6 properties all at once in terms of the ongoing management of the tenancies and so on. So a real baptism of fire. So what lenders tend to say is actually, you know, while we're happy to lend on these, we do want you to come to the table with some experience, have cut your teeth on a slightly smaller property previously, just to make sure that you understand, what's involved in letting properties, you'd understand the legislation that can sit around these more complicated assets, that kind of thing. So wonderful that Keystone have introduced the ability to lend to first-time landlords on these. Now, what I would say, having just said all of this, is there are other lenders who can lend on to first-time landlords on these types of properties. It's only a couple, but there are a couple of other lenders in that space already, so we're really pleased to welcome Keystone into that arena. Now, they've also increased the maximum loan amount for first-time landlords up to £750,000. It was previously £500,000. They're now accepting properties with deck access up to 75% loan to value. Now, deck access is if you imagine a block of flats, and to access your front door, rather than going up internally in the property and going through a front door which is inside the building, deck access is where there's a balcony that runs along the outside of the building and you access your front door from the outside of the building, essentially. These tend to be found on more ex-local authority type properties. They are regarded as being slightly lower, harder to resell on, which is why a lot of lenders tend to steer away from them. So really fantastic that Keystone can now accept these up to 75% loan to value. That's quite unique. Okay, more changes yet to come here still. They're now accepting applications from expats who are retired. A lot of lenders who will accept applications from expats do want them to be employed, not just employed, but employed by a multinational. So doing due diligence on the applicant is much more straightforward. So the fact that Keystone are now saying, actually, we don't need you to be employed at all, you can be retired, is really fantastic. And kind of linking into this a little bit, they've also increased the maximum age on their applications. You can be no older than now 91 years of age at the end of the term. They've increased their maximum exposure limits on blocks of flats. They have also increased the number of rooms they can do on HMOs and multi-units. So 15 bedrooms now on HMOs, and also multi-units was 10 previously. So they've increased the size of the properties they can lend on there. That would not be for first-time landlords, by the way. First-time landlords, they cap it at 6. And lastly, no stories as well. So no story limit for ex-local authority flats. So some lenders will say, well, okay, we're happy to lend on ex-local authority flats, but the building can have no more than, say, 10 stories. Keystone have removed that limitation. So an absolute raft of changes from these guys there. I understand from speaking to them that they've kind of had the ability to bring these changes in the previous months. They decided to hold off and just really let things settle down. The lenders have been quite busy dealing with remortgage business where people are really looking to lock into, 5-year fixed rates because of interest rates going up. Things have quietened down a bit, so Keystone have really now sort of turned their attention towards reviewing their lending criteria, and here we are. Are we going to see more lenders going down that route? I suspect we will see more lenders start to sort of make tweaks to their lending policy, probably not quite on this scale, if I'm honest with you, but still expect to see some more changes in terms of criteria. Now, a bit more information on Keystone just just briefly, because we've just gone through all the wonderful things that they've just introduced. If anything I've said there is of interest to you, all the other things worth knowing is with Keystone, there's no maximum number of properties in the background. There's no minimum income requirement. They can lend to limited companies and individuals. If you're a limited company, you can be a trading company or a special purpose vehicle. They also can accept layered companies, so a company owned by a company owned by people. They're also interestingly able to do day one remortgages. So you buy a property today, you can remortgage it to them, tomorrow or in the next 6 months or at any point. Some lenders don't accept remortgage applications until you've owned the property for at least 6 months. So great that they can do those. And lastly, their pricing. Where does it sit? Well, obviously from the things that I've mentioned, you will know that Keystone are a more specialist lender. Their rates start from a very, very competitive 2.94%. Okay, now Foundation Home Loans have removed a load of their products and replaced them all, increasing their pricing by up to 25 basis points. Now, what they've also done is launched a new product which is designed for expats purchasing or remortgaging a large HMO. And in their terminology, a large HMO is up to 8 bedrooms or a multi-unit block of up to 10 self-contained units. Now, the rates are quite good here, so from 3.99%. Now, in terms of Foundation Home Loans' expat offering, it's actually quite keen. So first thing they do, which not all lenders do for expats, is they can lend to both individuals and limited companies. Now, in terms of where the expat can be based, there are over 60 countries where they can be resident. There are obviously some which are on the kind of no list. An interesting one that you wouldn't necessarily expect to see is Australia. And this comes up often, and I just thought it'd be interesting to explain to you why. So essentially, some lenders will not lend to expats based in Australia, not because they have a problem with Australia, it's because Australia has certain rules which prohibit the marketing of financial services products to their residents. So essentially, by offering someone a mortgage in Australia, who lives in Australia, you're doing exactly that and breaching their conditions. So because it's a little bit of a minefield, some lenders have decided simply not to do that, and that is why Australia is on the no-no list for some lenders who lend to expats. Okay, now just briefly some other pricing updates for you. So West One have introduced some 2-year fixed rates. They didn't have any 2-year fixed rates for a while, no doubt, connected to them being able to secure pricing from the money markets. Their rates are now starting from 3.89%. We've seen Vida Home Loans remove all of their limited edition rates. We've seen the Principality make increases of up to 65 basis points across their buy-to-let and holiday-let ranges. We've also seen rate increases in the last week from NatWest, BM Solutions and Virgin. Okay, now there's been some more news released with regards to house prices. So house recorded a monthly rise of 1.4% in March, which was the largest increase in 6 months. So as a result, the average property price has reached another new record high of £282,753. So 2 years on from the first lockdown, house prices have now risen by £43,577 or 18.2%. So more regionally, what's been happening, so the southwest of England has overtaken Wales as the strongest performer in the UK in terms of house price inflation. That's now increased by up to 14.6%. The average house price now in that region is £298,162. Property prices in Northern Ireland have also done really well, with an annual rise of 13%, which means the average price there is now £177,265. House prices have also edged up once more in Scotland, reaching a new record high of £194,621. And actually, reassuringly, I think for many, the South East has also recorded a big increase there. That's the region that's been struggling the most. Obviously, the South East incorporates London, which has been really quite suppressed. And we'll come on to London in a second. But the South East has recorded a big increase at over 11.6%, and London has reported an increase of 5.9%. So things are continuing to carry on their upward trajectory in terms of house prices across the whole of the UK. And that's the news for me this week. It's been quite a quiet week on the news front, so apologies there wasn't anything more exciting in there, but wonderful to see Keystone making so many really strong positive changes to their product set. So look, I'll be back again next week. I say next week, probably next Thursday actually, as it's Good Friday. So I do hope you have a great weekend. Keep warm. I think the sun's going to be coming out and joining us over the next couple of days. We should be on for a fairly pleasant time over the next couple of days. If you do have any questions about anything, not the weather, I'm no expert on that, despite the fact I talk about it incessantly, do give us a call 0345 345 6788, or have a look at our website, mortgagesforbusiness.co.uk. Look after yourselves, and I'll see you again next week.